weekend all. Ira Epstein of Linn and Associates with your weekend Spider ETF wrap-up. And this is for Sunday. And we're at October 10th, 2021, getting ready for me at least to go to the ball game tonight. Hope the White Sox, win one of the games. And if so, I'll be out in the afternoon tomorrow because I'm invited into one of the owner's suites, and away I go to tomorrow's game. If not, well, at least I went to a game. I don't remember the last time I went to a playoff game. Football day today, you know what that's about. But let's talk about morning television, because that was important. You know, it's all about today President Biden's low ratings, and they are low on everything. He's a disaster rating when it comes to the border. I mean, 23% approval to me is, I'd call it a disaster. And his other ratings aren't up. So he's got to do something. And I think the biggest problem that President Biden faces is he was elected on a mandate that he sort of abandoned. And abandoning that is hurting him. So maybe he has to get back to basics. Probably have to consider, in order to help him, do you keep this tie between the infrastructure plan and the reconstruction? I don't know. Maybe the smartest thing he can do is just abandon that they have to be tied together. Now, that'll hurt him in his party. Okay, how much worse can his ratings get? He's not getting anything passed anyways. I don't know. I've got my own opinions on that. This isn't me. I was watching TV, but I'm sort of understanding what they're saying. To get a win, go for the infrastructure. Everybody wants it. That'll help set off the tide. It'll get you the anger of Bernie Sanders, OCO, and the others. They're not your friend anyways. Let them deal with it. It'll probably help everybody else for the midterms for the Democrats anyways. Just an opinion. So let's go to the charts that we normally do and understand these are going to be weekly bar charts. So we're looking at what the market has done. As we can see, XLK had been in an uptrend and it lost it. And it didn't just lose it. It had been in it higher lows, higher highs, and you finally, right through here, when you got through this, right through 151.21, and that was the week of September 24th, got through it. That ended the uptrend. That doesn't mean you've started a downtrend. It means you ended the uptrend. So these breaks are part of ending a trend. Where's the logical place for the market to try to grab hold? I would say it's the 18-week average of closes in red. When the market, let's see, goes to it, we don't have a big downtrend where I can show you how that would work. But each time you've pulled back, that has been what the market has done. This is not out of character for this market. That's the important thing. In terms of the Bollinger Bands, the resistance is way up at 162.27, support 142.61. Remember, the market will trade within those bands 95% of the time, and the first time you often hit the bands, that is where resistance shows up. Support the flip-flop of that. Momentum turned down. So when you lose an embedded reading, now watch this. Right here, you still have both numbers over 80. And when you lose it, you typically get back to the 18-week average. It all happened one time when that occurred. That is not the norm. Normally, it'll work its way down to that number. So what do we have? No trend, sideways action, momentum pointing down. That's my definition of it. In PAVE needs the infrastructure bill. Now, the interesting part is traders are looking at it, and they don't think this will fail. They already are hearing, okay, break the two bills apart. You're going to get a win on that. Everybody wants it. Very difficult to be bearish a market that's going to get the win sooner than later this year. So I think that the traders are waiting for the right setups for the moment. The trend is down with lower highs, lower lows, momentum down, battleground 18-week average. As long as the market doesn't get over 2650, you have a possibility of the 2483. If you take out 2650, you start an uptrend. You would have then higher lows, a higher high, and put into play 2765, the upper band. XLI, this is the industrial sector. It too is in a downtrend, but it's hit its targets, keeps hitting the lower band and bouncing away from it. You've got lower highs, lower lows. I don't see traders wanting to get overly aggressive on the bear side. If they did, you'd have to go to 85.21. That's a heck of a price from here. That's $15. That's going to be a 15% break. Why would the market break that much? So those are the ways that I start thinking about it. Then on the energy sector, we all know how bullish the news is on it, and it is. It's not just the analysts on the news. It is the case. Up and away you go. The president's energy policy's got a failing grade in the polls, which makes all the sense. It's one thing to want to go green. It's another thing to destroy or hurt your own economy in the process of it. China's already backed away and said, get me all the coal you can. I don't care how dark our skies get. We're not going to freeze this winter. That's what they're saying. Who's winning? OPEC. I'm your hero. At $80 a barrel, I'm going to give you a lot of oil. Don't break it too much because I might cut back on you a little bit. I guess they're not green. But we're paying them to produce the oil while we're going to go green, be it Europe, who's getting annihilated by high energy, and America. This whole policy of going green is correct, but there's got to be a better way to march into it rather than be a bulldog and let this happen, and we're at the mercy of OPEC plus. That's how I view it. We're up here. We at first we're hearing that the U.S. was going to release some oil from its strategic stockpiles. That fell apart. You're not getting shale producers getting super aggressive here. They're just making money hand over fist, everybody. In part, we can't produce more oil. We're against all this. I can go on and on. It's a real disaster. This energy policy of America stinks. In SPY, higher lows, higher highs. Well, yeah. You haven't gotten through 421.97. So the correction happened back into the 18-week average. This was coming when you lost the embedded reading. Do you see right here? You had a 77 reading. That's when you lost the embedded reading. It typically means the price is going to work back to the 18-week average of closes to figure out what next. It's exactly what occurred, and that's what you've been doing. We're still at that pattern. Emerging markets, they hit their downside target. Each time you've hit this Bollinger Band, you've gotten a spin back. I don't think we're going to see it different this time. So I'm not bullish, but I can see reasons not to be bearish. Big difference. GLD, you still have a pattern of higher lows, higher highs. However, the filter, and there is a filter on a swing line, which is in this weekly chart, a weekly 18-week average, you're under it. Therefore, the bias is down, the trend is up on the swing line, and you seem to be battling between the 100-week and the lower Bollinger Band for support, momentum just drifting sideways. The gold miners, what we have here is lower highs, lower lows, huge support, 28.26 to 28.62. Do not try to be a hero and think that 200-day average won't support the market. I think it will. That is not a buy signal, but it would be a signal, I think, for any that are overstaying their shorthand possibly. That's the number they'd want out. Also pay attention to this red line. If that closes over 21 by weekend, you don't want to be short anymore. I'm not saying it'll do that. I'm saying just keep your eye on it. Resistance all the way up here, back at 32.90 to 33.84. ARC, as she moves, Kathy Woods, to St. Augustine, is that where she's going? Back to the lower band. This is probably a support area for the fund at this point. But it's taken a beating. It has not been the place to be this year. This is her year of off-grid losses, people taking money back. Doesn't mean her philosophy's wrong, just not the place to be. You'll find you get a strong year one year, it's often that you get a pullback and then whatever made the fund work doesn't mean it's not working. Amazon, look at this, all the way back down. So supply chain issues galore. People buying ahead, maybe we don't get that Christmas buying that we so often look for. Everywhere you turn on TV, they are telling you to go out and buy now because what you want for Christmas, you're not going to be able to get. I keep shopping the front door in my house. I'll be lucky, and I want to replace it. I obviously have one. But We're talking from right now, late January, and I've gone to different manufacturers all over. And that's what you're dealing with. Mine is not a custom door. I'm not spending $10,000 on a front door. But that's what you deal with. If it's not in stock and on the floor, and you need it from a factory because you want it this color and that way and this, modifications to what we'll call a door that isn't a true handmade door, you got a real problem. Handmade could take God knows how long. Apple. Is this where the market wants to fight its battle? Is it about time? Could be. We'll see what happens. I ran into my first close friend that finally got the new phone, and he bought the mini, and I go, why? Last night this was over dinner. And he goes, I like the size. Okay, I said, can you tell me all the new functions? He goes, no. I was laughing. He liked the size. Okay. TLT. Higher high, lower low, into the lower band. We know interest rates are going up, but are they getting ahead of themselves possibly? That's going to be the big question. Starting here is where I see the first wave of support in the market. I am not a bull. You've got bias down, but I'm not bearish. You're oversold. I don't want any part of it. I think it's a good place to be away from. And Tesla, produce those cars. They're going to have their first cars in Berlin now. So being produced. So this is all good news. And this stock, nobody's paying much attention. It's not far from its all-time high. Not that far away at all. It's embedded. It's still looking, to me, still pretty interesting on the long side, even with Rivian and all these new cars coming out that are phenomenal looking, and everything I read about them, unbelievable. They got 500 miles to a charge on them. They're as fast as Teslas, not the Plaid maybe, but they're as fast for everyday use. Interesting. Still going up. Keep your eye on all that. I want to remind you that, every day I start you off with morning videos for my subscribers. My subscribers get to see on a weekend the weekly charts where I think buy, sell, whatever's coming in. And then Monday through Friday, I'm going with both short-term swing and longer-term trades. But it's Saturdays that I'm putting out for them the weekly charts for the longer-term picture. We wrap it together, give you some ideas, and you take it from there. Not expensive, I guarantee that. You're talking to get all this, $8.95. You get 40 charts at a time per week. 20-minute videos, each one of them approximately. Where are you going to get that? You're not going to get a good one for free on the videos on YouTube. Why would you? You'll get what I do there. I think I'm better than most. But you're going to get these. They're not going to tell you this is where you buy, this is where you sell. I will tell you where to do that. And by the way, I will be wrong in that process, and I will be right. I balance it. I wish I didn't have to balance it, but it works out that way. Go to our website. Under the word research, you'll find out all the information. I'm Ira Epstein. You have a great weekend.